Hi, this is Drew Tignanelli, and this is 2021, January 2021. Mikey, how are you?
I'm doing well.
Yeah.
I don't feel much different than last year.
Yeah, well, it's not last year yet when we're taping this,
I know.
that's why you don't feel
No
different.
movie magic.
Anyway, we're taping this just about a few days before Christmas, but we just want to give you our January update. So first off, markets are moving along. Everybody had lots of real concerns about the election and things, and everything that they were concerned about happened, but nothing happened to the stock market. That's a good lesson that, like we tried to say many times before the election, don't assume that you understand something that the market doesn't understand. So in other words, if you have a totally unique thought that nobody else is talking about or thinking about, then maybe you've got something if it happens. But if everybody's talking about something and the market is reacting opposite from what you think is going to happen, don't believe that your concept is correct when everybody's already thinking about it.
Yeah, I mean, then I think the other good lesson from 2020 is facts versus feelings. We can all feel a lot. We can all, have fear and have concerns over things. But statistically, when we started talking about concern for the market, we shared that every 14 or 15 years, there's tended to be a 30% downward turn with, generally, not too long, much more than a year and a half in most scenarios of a recovery. And, 2020 has been another year to build that statistic stronger and stronger.
Right. So, there are things that we have to always keep in mind. There are certain economic scenarios that could really clobber a market for a long period of time, and they tend to be very unique, and you don't see them happen very often. But we're always monitoring for those types of things. So, for 2021, I think you could have some downturns in the market, but for the most part, I still see technology going forward. I still see people coming into the middle class throughout the world in a big way. And I don't think that we even begin to understand what amazing things are going to happen over the next 5 to 10, 15 years with the advancement of technology and robots and autonomous cars and quantum computing and artificial intelligence, virtual reality. I don't even think we begin to understand how these are going to dramatically impact our lives over the next 10 to 15 years and the power of what the market's going to, experience from this.
Yeah, and 2021 should hopefully be the year where we start seeing more of the job recovery from 2020. I mean, we still have the good news is the markets have done well, but the economy still has a lot of room for growth back yet. And once those jobs return and those people get back to spending, that'll breed even higher. And, you take something that Drew said through this whole thing, which is, the strain we put on certain systems made those systems stronger. I watched a short documentary showing how Amazon's fulfillment centers work, and it boggles the mind how those systems work, and they've been tested to their full limits.
Yeah. So there are a lot of good things that have come out of this as well as the negative things. And, Charles Schwab said it best when I interviewed him a year ago. I'm running that interview again next week, actually, on WCBM.
Or last week, if you're watching this.
Last week on WCBM, that's true. But it'll still be podcast again.
Yep.
And that is, he said, a great investor needs to be an optimist. And so when I hear people telling me all the negative things that are going to happen and destroy the market and so forth, I think about them and I say, is it one of our big three that we have to be worried about? And if it's not, then it's probably just too much pessimistic thinking. Anyway, there is one security I want to talk about real quick, and that's Bitcoin. Because I'm sure a lot of our clients are hearing this about cryptocurrencies and Bitcoin going up. It hits 23,000, and that's like the highest it's ever been. And so it's going to start, getting the lemmings to come, follow it, because that's what happens. When something's going down, nobody wants to do anything with it. But when something's going up like crazy, like Tesla's going up or Bitcoin's going up, everybody's rushing to it because they're hearing everybody's making a bunch of money. My point with Bitcoin is this, simple. if you want to buy Bitcoin, I'm not going to stop you from buying it in any way, shape, or form. But the reason that we're not going to be taking Bitcoin seriously is simple fact that Bitcoin is nothing. It is it's just a belief. It's nothing more. There is nothing behind it. There is no money behind it. There is no gold behind it. There's no military behind it. There's no government behind it. There is nothing behind it other than that it's an algorithm with a finite quantity. There's 21 million Bitcoins that can be created, and they're already at 18 million or so.
Right.
And so it's becoming more and more finite. So if you want a Bitcoin, you're going to have to pay up for it. But there's nothing. It's literally nothing.
But to qualify, I think what you're saying is that there's nothing we see at the moment in us buying an investment using, kind of our investment grade, mentality of looking things and buying Bitcoin. But it doesn't mean that we don't continue to follow cryptocurrencies and the algorithm behind them.
I love
other products that could come out of that.
I'm that's why I say if any client wants to buy a Bitcoin, I would certainly not tell them not to. I'm just saying that as an investor, when we buy a building, we have a building that has rent and physical, land that it owns. When you buy a company, you buy a company with earnings and sales and people.
Well, sometimes we buy companies without earnings.
But you buy a company, you still have a business,
yeah.
You still have revenue, you still have a product, you still have people behind it and so forth. With Bitcoin, my only problem is I don't know what I'm owning. I own nothing more than a bunch of people who believe that they want to own Bitcoin, and as long as they do, they're driving the price out. If they stop believing in the Bitcoin, it goes to zero.
Right.
And here's the other thing about cryptocurrencies is that you can create a cryptocurrency in a heartbeat. Switzerland's looking at creating.
Right.
The United States is looking at creating cryptocurrencies.
The technology is a good and valid technology that we might have a good purpose for, but
it's just a concept. So
sure.
Anyway, that's a couple of things for financial planning. Number one, people always ask me itemized deductions. I don't need to worry about them. I keep telling everyone, do not get out of the habit of keeping your itemized deductions, your medical bills, your state and local and property taxes, your mortgage interest, and so your charitable giving. Still, you want to give us that dollar amount when we get together to do your taxes. But this year, it's especially important because there's a new deduction, $300 of cash, has to be cash. You get regardless if you itemize deduct or not. So that's something to
Yep, and you got to have the receipt or it doesn't count.
Yeah, you have to have the receipt. But there's two reasons. Number one, we've got this new law with charity that you get $300, but also the old law of 2017 and before comes back in 2026. So if you get out of the habit in 4 or 5 years, you're going to have to deal with this. And there is a chance you could get a full repeal of that tax law in 2022, 23, something of that sort.
Sure. Well, and they showed us this past year that they're not above retroactively changing the tax law for a prior year that you can still file. So it's always good for us to have the information and that you stay in the habit of giving it to us. But
yep.
I did have a topic I wanted to talk about a little bit. So it is the New Year's, and I couldn't avoid being cliche in creating a New Year's resolution list for everyone. So a lot of what's on this list, what inspires us for this list is things that even though we've told people 100 times and we've had in the video 100 times, we still find that people haven't done them. And it tends to be some event that happens that they go, oh, I wish we had done that. So I'll go back and forth with you a bit here, Drew, but the number one, if you're talking to your kids, what's the most important thing you teach them about finance? The number one thing is cash flow. You need to maintain your cash flow statement. You need to know where you spent your money. And
don't need to budget it. You just need to watch where it's going.
You need to, budgeting is looking forward, cash flow is looking backward, and actually cash flow is more important almost than budgeting, because the thing that Graham Ewing in our firm talks about a lot is matching up where you spent your money with your values and then noticing when there's a difference. If spending $3,000 last year at Starbucks doesn't line up with your values, you wish that had gone to something else, you can fix it going forward, but you'll never notice unless you look.
Yeah, absolutely. I don't have my glasses
Credit
on,
freeze.
so I can't. Credit freeze. Oh, yeah, we always want to see our clients do a credit freeze. And we're going to do a whole seminar on this list.
Yep, we will.
At the end of January. So if you don't get it, but credit freeze, it's an impenetrable wall to prevent identity thieves from taking and borrowing money in your name, which if that happens, it's a disaster. Trust me. And
it's a mess.
this is a great way to stop it.
And don't forget about your minor children too. It's great to lock their credit as well, because credit or identity theft is unfortunately rampant, especially as we continue to hear in the news more and more data being breached. Another one is having your home equity line of credit, if you need it and if it makes sense for you, meaning you're not planning to move in the next couple of years, having that in place.
Yeah, we just had a client just yesterday where we needed some money, and we asked them, do you have a home equity credit line? And they said no. I never did that.
Never got that done.
Never did that. So,
and it's sometimes not a good time to start to ask for it when you need it.
You can't ask for it when you need it, Property casualty insurance. I can't see it, but I remembered it.
Okay.
Requote your property just look and see, do I really have the best company out there for my auto and home? And I do it, even though I'm very convinced that Erie's going to prove to be my best company. I still look every so often,
Absolutely.
every 2 or 3 years at the minimum.
If you don't have one, everybody should have 3 to 6 months of expenses in an emergency fund.
Online savings account.
And gosh, was 2020 the year for people to realize how powerful that is to have that emergency fund. Another important part of that is not just leaving it at your local bank's savings account that's
Or
never
in your
earning,
mattress.
or in your mattress that's never earning anything, no matter what interest rates are. Even though interest rates are low right now, high yield online savings like Ally and American Express Personal Credit and
Marcus Bank
Marcus
from
Bank,
Goldman Sachs is very good right now.
all of them are paying about 0.5%, and 3 to 6 months of expenses is generally not a small amount of money for anyone.
And they were paying 2% a year ago, so even though a half doesn't sound like a lot now, it fluctuates very rapidly. So
Yeah.
you want to be using online savings accounts. I think we could go on, but we'll save that for the seminar in January.
All right, well,
No,
just
you
let me
go
get my
ahead.
number one.
Go ahead.
I'm just going to get
your
my number one.
one.
So, and there's a little bit of humor of this coming from me, but promise me I do practice what I preach, even if it doesn't look like it. Exercise. People go, well, actually, that's a normal, New Year's resolution. But being healthy, exercising, getting activity, getting that motion will make you a happier person. And the happier you are, the less likely you are to make the number one financial mistake, which is trying to use money to compensate for some other distress in your life. So even if you don't think it'll help, give it a try. Set a goal to walk a certain amount of miles per week or something like that. And I guarantee you'll be happier and you'll feel less need to spend money on things you don't need.
That's a great point. I've talked about it many times that what you think about money will determine everything you'll do with and for money. That's the foundation of all financial planning. And a lot of times when we see people with debt issues, it's usually because there's a bigger psychological issue going on. And what you're talking about is very common, that they're not, people say they're just spending too much money. Probably because there's something going on in their lives. And compensating. So anyway, that's a great point, and we do wish you a very happy and healthy New Year. This is Drew Tignanelli saying God bless.